So I made a mistake that costed me $6.5 million. So years ago when I was getting started in my investing journey, I went on YouTube like most new people do. I went on YouTube and I typed in how to get rich investing in the stock market. And you could probably guess that there's a ton of videos that pop up where people are saying you get 2x your money to 3x your money overnight, how to 2x your money in 2024, and how long does it take to 2x your money, master day trading in 28 days, how I learned to trade in 2 days, how I turned $100 into $1,000 trading stocks. So there was all this content out there that really made me believe that I could double my money overnight in the stock market. So as you could probably guess, I clicked on a video and I liked how he presented the information a lot, and I went through with this guy's system. So I told my wife, I told all my friends, I'm gonna be the best day trader of all time. I got like 7 screens set up. I had all this software, all these charts, all this technical analysis, and I'm just having like flashbacks in my head right now of what I was thinking at that time, where it was like, I'm gonna work 20 minutes a day from anywhere in the world as long as I have internet access to my computer, and I'm gonna day trade and make thousands of dollars every single day in a low risk way. And I'm telling my wife and telling my friends, I'm like, this is gonna be great. You guys gotta do it too. And that's exactly what I did about 10 years ago. And whether you're a brand new investor or a seasoned investor, you could probably think about what I was thinking when I was brand new. It's like, heck yeah, I want to do this. I am all in. Take my money. Let me do your course. Let me join your Discord. Let me see your live trade alerts, all this stuff. And I did it. And I'm going to be completely honest with you. For the first couple weeks starting out, I was crushing it. I was making a crap ton of money. And I'm going to my wife and I'm going to my friends and I'm like, look guys, like this is working. Like look at my account. I started it with X amount of money and now I have X amount of money right now. I like double my money in a week. It was amazing. So think about what I was thinking at that time. It's like I'm a brand new investor, but I feel like a genius right now because I just doubled my money in a week. And now I want to put in more money. I want to invest more money into this system because if I could double my money once, why can't I double my money again? And as you probably guessed, that's exactly what I did. So full disclosure, I started out this account with roughly $10,000. I went from $10,000 to $20,000, but then I felt confident. I was ultra confident as this newbie that made a little bit of money. I was like, if I could go from 10 to 20, why can't I go from 20 to 40? And in order to get there faster, why don't I send more money to my brokerage account so that I could then start with 50 and then go from 50 to 100? And you probably guessed it right again. That is exactly what I did. So I put in $50,000 total of my own money and I'm like, I'm gonna double this and go to 100K in a week. And I did everything right. I followed this guy's strategy to the T. I followed the trades exactly when he sent them out. I closed them out exactly when he sent them out. I did everything as this expert said that I should do. But there was a problem in the market that was crystal clear when you look back 2020 hindsight. But going forward, looking into the market, nobody would have expected that this curveball would have came at us and the market had a lot of downside volatility. Let me show you the chart of exactly that moment in time where this happened. So the stock that we were trading was Apple, and this is a chart going from 2013 all the way to 2017. And this is the exact line that my mentor had on the Apple chart. And he's saying, look, Apple chart bottomed right here, it bottomed right here, bottomed here, bottomed here, and bottomed here. So it had all of these touches on this line right here of support, and he was sending out buy alerts on this dip right here. And this is about right when I got into his system and I started sending money to the brokerage account to do his day trading strategy. So remember how I said starting out it went pretty good because I bought some call options right here, I bought some shares right here, and it went straight up, and I made a lot of money on this little pump that happened right here. You could see what happened shortly after that. Right up here is where I doubled down when the market was going up, when I felt confident as this newbie, because I'm like, I went from here to here, it's gonna go from here to here now and just keep going up. But as you could see, the call options that I bought on this top right here, they didn't do good. The market went straight down because I bought a 1 week call option. I'm like, I'm gonna double my money on this call, because again, it's gonna go from here to here and then here to here and double up higher. You could see stock went pretty much straight down. So what did he say to do when the stock went straight down? He said to double down. He said to buy more call options, and I bought call options on this tiny little wick right here. I don't even know if you could see it, but there's a little bit of green that happened on Apple stock on just a couple days right here, and that's when I bought again. I doubled down again. So Apple stock went up a tiny bit. I'm like, okay, I'm looking good for a few hours, and then bam, it goes down more, and then all my call contracts expire worthless, and I lose everything in my brokerage account. So I'm gonna be honest, I was devastated. I was like, how could this possibly happen to me? How could I lose all this hard-earned money in the stock market, all this money that I slaved away at my day job for, trading time for money to put into this trade with this guy that I don't really even know or trust, and I didn't even know how much money this guy actually had, because it's like, if your system is so good, why don't you have millions of dollars? And didn't really think of that stuff back then. I just knew that I bought call options off the rip, I doubled my money, and I'm like, I could just keep doubling and doubling and doubling my money again because this guy might be some sort of guru. But as you could see, that didn't happen, and you could try to guess what I was thinking at that time frame. I was devastated. I said, screw the stock market. I'm never gonna do this again. This is rigged. This is only for rich people. This is never gonna work. So I said, I'm done with the stock market. I'm never gonna do this again. And I just walked away from investing forever. That was my sentiment when I lost all my money in the stock market. And you're probably saying, well, Brandon, you only lost $50,000 in the market. I clicked on this video to see how you lost $6 million in the market. We're gonna get to that in just a second. Don't worry, it gets better. So a few months went by where I cooled down from how much money I just lost in the stock market, and my wife was no longer mad at me that I was now on YouTube, and I happened to go through a Warren Buffett video that just popped up on my feed. And the video's title was this: the option trading strategy that Warren Buffett does to generate cash flow in his portfolio in a low risk way. I was like, Warren Buffett? Who else can I trust besides Warren Buffett? He has $100 billion. If Warren Buffett does it, it has to be good. So I clicked on a video, I watched it from start to finish 3 times that day, and I was like, oh my God, this might be the strategy that could actually work and actually scale my portfolio. So I had this massive light bulb moment. Because for years, they've been telling me to buy the hot stock, chase it higher, use margin, use options, and just hope that the stock continues higher to make money. But this is actually the exact reason and the exact problem as to why I failed to scale my portfolio the first time. So going back to this Apple chart, they've been saying for years, they've been telling me to buy the hot stock, chase it higher, use margin, use options, and just hope that the stock continues along this trend line and it just keeps going higher. But this is actually the exact reason and the exact problem as to why I failed to scale my portfolio so bad. After all of these years, all of the failures wasn't necessarily my fault. It was just because I didn't have a system that was actually proven to work. No wonder why I was struggling, because just look at Apple stock. It was going straight up. Really, anybody would have made money on call options on Apple stock in this time period right here. But I happen to be the unlucky guy that bought call options right here, made a little bit of money and it went up, but then Apple went down quite a bit from there and I got wiped out. But to be completely honest with you, I'm actually happy that I lost that money, because if I wouldn't have lost that money and I would have kept making money doing this option trading strategy that this guy had, I would have continued to just build confidence more and more and more with every single trade that I made money on. And eventually I would have risked every single dollar that I had. I probably would have did a HELOC on my house, took the money out of my house and put it in call options on Apple stock the second that this guy would send out another buy signal. I would have did it and I would have been wiped out even harder. So ever since I watched that video of Warren in 2015, I realized crystal clearly what actually mattered in the stock market to make money and what did not, what was noise and what was signal. So the secret, very simply speaking, is that you want to buy great companies at great prices and use options to magnify your returns going forward. Great companies, great prices, great growth prospects. They don't have much competition and they pretty much just dominate their space. Now you're wondering, like, how do I find companies like that? How do I actually make money doing this strategy? Like, all that sounds great, but how do you actually apply that in the real world? So you asked for it, and I'm gonna give it to you right now. So we're gonna go through my flow of analysis of exactly what I do to know if I should buy a stock, sell a stock, do options, or not do options on it. And there's gonna be 11 critical things that we have to go through right here to understand exactly if we should buy a stock or not the right way. Not the way that that other guy was doing it, where he was just hoping that the stocks are gonna keep going up. When we get through these 11 things, if you know how to understand these 11 things right here, we're gonna know definitively if a stock is gonna go up or down and how to do an option play on it to capitalize on the movement that we think is gonna happen with the stock. So number one thing we're gonna look at right here is we have to evaluate the PE ratio of the S&P 500 and the NASDAQ. So it's always critical to start high level, because if the S&P or the NASDAQ is in a bubble territory, you're probably not gonna make money on any individual company going forward, because if the S&P 500 or the NASDAQ happen to crash, honestly, everything is probably going to go down with it. So if you're super bullish on something, which means you think the stock price is going to go up, but these go down, these two indexes right here are going to drag you down, and you're probably not going to make money on that individual company that you were trying to be bullish on. Now, the second thing that we have to look at, which I'm going to do all this very briefly because I don't want to make this video too long, the second thing we have to look at is we have to evaluate the 10-year bond yield. So typically speaking, the S&P and the NASDAQ return roughly 10 to 12% per year. So let's just go with 10% to keep this simple. If the 10-year bond yield happens to go up to 10%, meaning you're going to put in $100,000 into a 10-year bond, and you're going to get $10,000 essentially in interest every single year guaranteed, as long as the US government does not default on its debt, which is very unlikely for it to do. So a guaranteed 10% right here, or 10% which is considered to be risky right here in the stock market. So if bond yields happen to go way up, stocks are going to become less attractive and bonds are going to become more attractive because this is considered to be the guaranteed rate of return. So we have to understand what the bond yield is at in order to feel confident buying stocks in general. So number 3 is you have to evaluate inflation because this goes hand in hand with what bond yields are actually going to do. So if inflation goes way up, typically the Federal Reserve is going to raise interest rates. And when they raise interest rates, bond yields are going to go up. And if bond yields go up, typically the PE ratio of the indexes like the S&P and the NASDAQ will go down. And what does that mean when the PE ratio goes down? Stock prices go down. So if none of this works out right here, it's not a good environment to make money in the stock market and do bullish option plays especially. So number 4 is a really big one. And remember, we're going to go through 11 things, and number 10 and 11 are hands down 100% mission critical. If you don't understand 10 and 11, you will 100% chance not make money in the stock market. I'm not trying to clickbait you to keep watching this video so it gets more views or whatever it is. We have to do this in order because if we do number 11 or number 10 right now, the other stuff is not going to make sense. So number 4 is we have to estimate my general economic growth expectations for the economy. So are we going to have trade wars? Are we going to have wars in general? Are we going to have a recession? Are we going to have embargoes with other countries? What do we think that the president is going to do? I know a lot of this stuff is not 100% predictable, but you could factor this in a little bit to understand, hey, maybe we're going to do tariffs. Maybe some of these trade deals don't actually go through pretty good and we go into a fight with these countries. And maybe one of those countries happens to be China. So we have to understand that if this deal doesn't go through, our growth expectations might actually be pretty bad. And when growth is bad, stocks usually aren't going to go up. So number 5 is massive. So every single quarter when companies report, I listen to dozens and dozens and dozens of earnings calls and I read through the earnings reports to get a consensus on what these companies are doing. So let's just take NVIDIA, for example. Maybe we go through NVIDIA's earnings report and their earnings call and it goes good. But we have to think a little bit deeper than that before we make a play on NVIDIA. Let me explain. So SMCI and Dell, they build the server racks, which is basically where you take the NVIDIA chip and you integrate it in this rack that cools the chip down and just puts it in a warehouse or the data center. SMCI and Dell put in those server racks. So if you go on a Dell and SMCI earnings call and they say, hey, demand is pretty bad, we have no order backlogs, and we don't have any pricing power to raise prices on our server racks because nobody wants to install this stuff. But then we go on NVIDIA's earnings call and they're like, oh yeah, demand's through the roof, it's looking good. It's kind of like those two things conflict each other, but they should be going hand in hand. It's like if NVIDIA's doing good, SMCI and Dell should also be doing good too. And then it's like, who's gonna buy these chips from NVIDIA? Meta, Google, Microsoft, Tesla. If they're not saying they're gonna be buying NVIDIA's chips, that could be looking bad for NVIDIA too right there. So you have to evaluate the consensus from earnings calls and earnings reports to know how many different companies are doing, to know how one individual company is doing. And I like to listen to earnings calls and read the reports from many different companies in many different industries to get a gauge of how the actual economic growth expectations are gonna be based on what Home Depot is saying and what Dell is saying and what Apple is saying and what Meta is saying and what Chase Bank is saying, all these different companies in different sectors. We have to understand how all of them are doing. And number 6, it's freaking massive. And this kind of builds off of what I was talking about with NVIDIA. We have to follow the flow of money and identify the trend of where these capital allocations are going. What are these companies' capital expenditures? Well, at the time of recording this video, we're in a massive AI revolution where all these companies, all these hyperscalers, as we call them, which is like Meta, Google, Amazon, Apple, stuff like that, they're buying these chips and they're building out these data centers, and we want to see how much money they plan to keep spending on these data centers. If they're guiding in their earnings report, they're going to spend way more money than expected on data center build out. Well, who's going to capitalize from that? Probably SMCI, probably AMD, probably Dell, probably NVIDIA. Companies like that are probably going to do well. So you have to understand the trend and capital allocations of these companies. So once we get to step 7, at this point, I have a general idea of the overall market, these businesses, economic growth going forward. I have a pretty good consensus on how I feel the market's going to do going forward. So at that point, if all this checks out, we go to step 8. But if none of this checks out, we do not go to step 8, or we consider shorting the market or buying put options or selling call options. So when we get to this point, it's kind of like, are we bullish or are we bearish or are we neutral? And sometimes you will be neutral. Sometimes you're not always going to know what's going to happen. But usually after doing all this, you'll come to pretty good conviction about what the market's probably going to do going forward. So if things look decent from the above and I'm bullish, I'm going to run screeners. When I run those screeners, I plug in things like PE ratio, earnings per share growth, revenue growth. I do it by market cap because I don't buy companies that are below a certain market cap level because, you can make a lot of money in penny stocks and companies that are below $1 billion market cap. but it's very hard because they're way, way, way more risky. You know, we're here to scale our portfolios and do this for the long run. And if you get wiped out on a few trades starting out, you're going to start over at zero time and time again. So I choose to do things a little bit more conservatively, but the difference between me and the guy that I learned from starting out is he will get restarted at zero at some point in his life, and I will not. I will keep compounding my money year after year after year. So I run the screeners, and then the companies on the screeners that pop up compelling, I do a deeper dive into them. And I have this thing called a stock sheet, which we'll get into that in just a second, where all the companies that pop up good on my screener, I then go do deeper dives on these companies to understand exactly what's going on in the business, what are the prospects going forward, and if we should make a trade on it or not. So number 10 is freaking massive, and the company has to have a moat, they have to have pricing power, they have to have a durable competitive advantage, and they need to be trading near intrinsic value to consider buying shares. Now, number 11 is going to be about options, and I'll get into that in just a second. But a moat and pricing power kind of go hand in hand. It's like if we take an iPhone, for example, if Apple wants to double the price of an iPhone, are most people still going to go buy that iPhone? I know that I personally would, and I bet that you probably would too, because if Apple doubles the price of the iPhone, do we think that they're going to sell half or less than half of the phones going forward? Because if you double the price and then they sell half, they're going to end up making the same amount of money just by selling phones straight up. But I bet you that 95% of iPhone people are still going to keep buying iPhones if the price of the iPhone doubles. So that is a moat, that is pricing power. So if they pass this test, it's like, do they have a durable competitive advantage? Like, who's their competition out there? Really, the only competition is Android, and it's like people either love or hate Android. It's like if you're an Apple guy or Apple girl, you're gonna stay with Apple probably forever. You're gonna have an iPhone, you're gonna have a Mac, you're gonna have an Apple Watch. You're so integrated into their ecosystem that it's like they probably have you in there forever. So Apple does have a durable competitive advantage. Now, I'm not gonna tell you right now if Apple is or is not at intrinsic value, but if it was at intrinsic value, which I have a calculator that you could plug this in, you plug in a few different growth metrics, which it's super easy to figure this stuff out. You plug it in and it'll spit out what the actual intrinsic value or just the true value of Apple should be trading at. And if intrinsic value is higher than what it's trading at, that means the stock is cheap. But if intrinsic value is say $100 a share and Apple's trading at $500 a share, you can see it's very overvalued in that situation. So if it passes the test right here and all this stuff up here, consider buying shares. Now, if it's very, very compelling, or maybe it's trading quite a bit of ways below intrinsic value, I would consider selling puts or buying calls. And my option trading strategy is ultra simple, and that's key to actually make money in the market doing this. You have to keep things simple, and if you don't, you're probably gonna get smoked. So I love to sell puts on things that I'm bullish on, and I take that premium, that credit that I received in my account immediately when I sell the put, that cash flow that comes in, I take that cash flow, and then I'll usually go buy calls. So I'm essentially going to get free call options as long as the put that I sell expires pretty much worthless. Now, if you don't know anything about stock options, I know this is probably a little bit over your head, but I'm essentially getting leverage on my portfolio without paying margin interest, and I'm doing this in a very, very conservative way because it passed all the tests that I lay out above here to understand if the company is truly a buy or not. And remember, the way that I just explained all this is the bullish situation for the market where I think things are going to go up in price, but if it was a reverse and everything looks bad on those 11 things, that would be the point to potentially short the market, buy put options, or sell call options. Remember, if you're not an options guy, I have something coming for you in just a second to explain all this stuff in a crystal clear way and to know my true system from start to finish exactly how to do this stuff. And now going back to the video title where I said that I lost $6.5 million in the stock market, this is essentially how I lost the $6.5 million. So right now I have a net worth of roughly $2.5 million to $3 million depending on how you value it. Now, if I would have started out with my strategy and my system from day one, my net worth would not be 2.5 million right now. My net worth would be closer to 8 to 9 million if I would have did what I did starting out based on the historical returns that I generate with my strategy that I use. Now, that is money left on the table because I just used the wrong system starting out, and I spent all of these years developing my system. It took me almost 10 years to figure out what system actually works before I started actually scaling my portfolio and making a lot of money. So if I would have started with this system from day one, I would have started out with the right foundation, the right system, the right strategy to know exactly what to do in all different market types, to know how to capitalize and how to make consistent, safe money. So that right there is how I technically left $6.5 million on the table in the stock market. Yes, it sucks. I wish I started out with this system from the get-go. And the best part about it is that you don't have to make the same mistakes that I did, and this is why. So the system that I use right now is roughly 10 years in the making, and it cuts out all the mistakes that I made. It cuts out all the money that I lost starting out, all the hard lessons, all the BS, all the stuff that doesn't matter. I cut all that out, and it's so much easier than you think to scale your portfolio to millions with stocks and options than what you think. So I'm gonna teach you exactly how I scale to millions and generate thousands monthly with stock options all in a low risk way. And yes, anybody could do this. I have dozens and dozens and dozens of reviews right here. You can see right here exactly what you're gonna learn in my course, but this is a package deal right here. You're gonna get access to my course and you're gonna get access to my mastermind Discord all under one subscription. So it's one package and you get my course and my Discord, which is exactly what I wish was there when I started out. So if you're ready to learn a strategy that scaled me to millions and I generate thousands monthly in a low risk way with stock options, and the strategy that hundreds of people just like you are doing right now to scale their portfolios, click the link in this video description. It's gonna bring you to this website page right here. And then all you have to do is click on any of these Join My Course Plus Discord buttons right here. Once you click on this button right here, it's gonna take you to my secure checkout page where you're gonna sign up and you're gonna be ready to go. You're gonna get instant access to my course, instant access to Discord, and I strongly recommend after you check out, you immediately go into my Discord and see my market update from today to know exactly what's going on and exactly what I'm looking at. So the best part about this, it's all under one subscription. It's extremely simple. You can cancel whenever you want. There's no commitment. If you don't like it, just cancel. But I'm very, very confident this is going to completely transform your life for the better. So if you're interested, I'll see you guys there, and I'll see you guys in the next video.